Withdraw it. Cool. So you're. It holds the other way. Yeah. Nice, thank you. That works. What are you doing? That's good. Hey, well, I'm here to teach it. They got some merch too, so a little bit of merch, not a lot of merch. That's my favorite one.
Nice, yeah. So what did you guys
No, so we have it licensed since 2014. But we did some research on places where Black owned businesses are still doing well, and DC is in the top 5. So that's one. Plus, I mean, it's a good target market, very diverse, up and coming. Oh, and well, back then it was. Now, I mean, even something in Southeast will cost you, a lot of money.
Yeah.
Yeah. So big. He's not here yet. I'm here shortly. Yeah. Hey, what's up, man? Yeah, well, like 5 minutes. I'm in the middle of setting up a presentation. I'm sitting up so I can talk.
You got it right there. Stronger.
Yeah, yep.
It's
Okay. Gotcha. So you need updated pre-approval? No, they're good. No, they're good. They're good. Yeah, I mean, it's only probably talking difference, maybe maybe $100 if that, maybe 200. Yeah. You need updated pre-approval for ones for 275. All right. Yeah, I pre-approval I'll send right away. Right now may take a little bit of time. I bet you go on these. Cool. Okay. All right. No problem. Anytime.
But maybe we can get like that.
I will paragraph on second about our phone thing, the Apple. Thanks.
My first step was like, okay, but now, you know, a lot. Because I didn't have this work. No, they were finding those things that my phone was still fun. Because that's not on the phone. Yeah, they were like. It's good. We're out. But we got everything. Yeah, but they were like,
There is, I think, 2 different ones, yeah. But there's 2 in the
but I should be able to access that. Right. No, it was not. It's separate. The total time. Get the log in and receive email and the piece of that. But not. Yeah, you'll go there. Yeah. Oh, yeah, thanks. Little drive. All right. Hey, Brandon.
Hey, morning.
Yeah.
Yeah.
Okay. Yeah, I think. Like.
Very good.
Yeah.
Okay. Sometimes.
Yeah. Okay, you know, that's the question that you call, right? I appreciate it. There's nothing to know.
It was not what I was expecting, but that's what I was expecting. My days probably growing up was too that. Well, I thought it was kind of right. So she's like, what was on the team, they all, and I told them, the ball. It's a year ago, I went to that, so good. So like, she's like, what's great, she like, saw like, door behind the ball, I don't know, year, and here, it stings, it's a tiny bit, when I first sort of, and I literally, within like 2 hours, like, my jaw's like, the next day, my jaw's like, yeah, I was like, oh, this is great. I'm bad, that's how I'm just, I do it anymore. I mean, it is, no, it's it's like, getting out of something, yeah. So I'm not really easy to see the lines out, come on, do it, it's like, what's that? The first one, the one that takes you through. Really nice. It's about relations.
Okay. Are you doing better?
Hey, how are you, sir? We'll use my name. What's up?
Oh.
It's regular, it's like, I saw you. It's a good load.
Yeah. You run out of luck.
And it's like, I only park 1,500 okay, but it's literally twice the price. And I'm just habitually, like in this concrete or that.
That's fine. There's one time that this is manager came out. He typically is like. Yeah. Yeah. But then I Right, like, that is one of the things that we have to check on the, yeah, in there. I think those are, your rates, right. Right.
I did not. Well, it was more the one thing vacation next week, and I didn't want to take all 2 weeks back to back with that. Yeah, it's sort of about. So I've been. Lovely for you. The time that he's been away, it's been helping her. So I've just been doing in law doors.
To be fair, I left Zoom up there. But I'm a nice guy.
That's it.
Well, that's how it. Be fair.
Depending on the chair, so I'm gonna say.
No, we just all. Yeah, so, I'll email you information.
Don't worry, guys, that's just pre-production. It's not a big deal yet. It's pre-pro. Are you ready? I've done it some ways because you can't have. Meetings. They have to be together. And I know it's a little bit. Well, pretty. It's good.
Yeah. And they're sitting, on that thing, the water. That's. So first. Yeah, we might have to break down on. More issues, try to be. It's kind of just get out and take a moment to compare. Process. And that. I think here then. Okay, so it's, I love it, it's full class, so I kind of sort of, that's some of the, 39, maybe I don't really know. There's, this one, if you based on the amount of respond, it's harder. We're gonna talk about where it's at, and the plus I like mortgage. Sorry. Start that next. Oh, and like, so I'm looking at signs here, but we got that. I'll have you a little bit. Okay, over there. All of the. And then the passing of the case. And then. Additional. Oh, really? Yeah, I think we'll just I was like kind of times into that, so it's mine.
So.
You're gonna get a high that was next one.
Yeah.
Yeah, I was. Before we get started, I just want to thank everybody for coming and thank all of our MSA partners for putting today together. At the end of the day, today we will be drawing a winner for a $250 Visa gift card. There are qualifications. You will need to be here all day in every class, and you will need to be in the team meeting to.
At some point before the end of this class, you will receive the ticket. Hold on to that ticket. At the end of the team meeting today, we will draw the winner. Again, you must be here all day, attend all the classes. We will have eyes in here watching you. So, and who doesn't want free $250? Who doesn't want to get paid to learn? So, without further ado, our mortgage partners will start. First up, mortgage 101.
I never get a chance to introduce this guy, so I figured I would give it a shot. Many of you that are in the office now know Brandon, you've seen him like walking around. I met Brandon not too long ago, and by not too long ago, I mean 25 times, but we're actually best friends. Brandon is one of the most remarkable gentlemen that I've ever encountered. He works extremely hard. Last year, he was able to, and the first year doing this, but he was able to close $100 million in volume. So really proud of him. I know he has a lot to share with you guys about mortgage basics and our good friend Alyssa. And if you guys can give him a warm welcome, appreciate it.
Morning. How's everybody doing? Yeah, inspired and excited. Today you get to experience 6 hours of mortgage information. By the time the day is over, your mortgage IQ will be 160. I'm joking, not that high, right? But listen, myself, get to talk about mortgage basics, mortgage hacks, mortgage finance 101. Christian, thank you for the great introduction. Give you some background on myself. I'm a graduate of Bucknell University back in 2006. All right. Had a short stint in the financial planning world where I learned about financial products. Okay. Very similar to the mortgage world where you're coaching people on how to make a life decision. All right. After I graduated and I worked in the wealth planning space, I had aspirations of playing at the next level, football. Right. Didn't make it. I almost got signed to be a pro wrestler. The true story, guys. Stay after, I'll tell you the entire story. All right. And then this gentleman found me back in 2009 in the midst of a horrible economy. Okay. Now, the funny thing is, you guys are hearing out there, rates are super high. You know, if you're a new agent, don't get into business. It's a horrible thing, right? I got into the business at a time just like this. Okay. I was calling people up. They had 11.99, 14.99% rates. I was selling 7.25, 6.875. The difference though was this. During that time, houses weren't selling. Okay. Houses would sit for 5, 6, 7 months. You can sell a house in 60 days, you're David Blaine. Unlike now where things are still selling. I say that's true because the market is very cyclical. It's ups and downs and peaks and troughs. Okay. So for someone that's just getting started, right now is the best time to get it. Okay. As Alyssa and I go through the presentation, feel free to chime in, ask questions, and share. All right.
I don't know after that. Hi, everyone. I'm Melissa Chapman with Guaranteed Rate Mortgage. I've been a loan officer for a little over 7, 8 years. I'm also a real estate investor as well.
And the next slide.
Okay, so what is a mortgage? Does anybody know what a mortgage is?
Well, you guys can just.
Yes.
Does anybody else besides mortgage professionals know what a mortgage is? What's a mortgage?
It's a lien against real property versus of a loan.
Exactly. Exactly the mortgage is. It's a loan against a property, for a secured loan.
What to ask you, so in the workaday world, hear this a lot. People interchange the term mortgage, note, loan. They're actually different things. And we give you a little hack, which is not the next one. Okay. So like he said, a mortgage, okay, is when you secure a loan against property, right? A mortgage is actually a lien placed on title. Okay, it's a lien, a tax lien, it's a lien. All right. Now, The second security instrument is something called a promissory note. Okay, the promissory note is your promise to pay back the full amount of the loan. It's only 3 pages, maybe 4, but it has your rate on there. It has your first payment date and when your last payment is due. Okay, now the deed is something that the bank holds on to, similar to like the car title, to your car's paid off. The bank holds that until you pay the note off, the mortgage is lifted and it's free and clear. Now, there's something called equitable title. People don't know this. That gives you the ability to refinance and sell the asset. Okay? That is your security as well to the house. So you have the mortgage, the note, the deed, okay, as well as the promissory note. Takeoff. How many people here have been on a plane before? Everybody? Okay, all right. Anybody ever travel internationally? Okay, I'm gonna show my age real quick. Anybody remember traveling prior to 9/11? What was it like? Right, good. Okay, right. You had a flight at 9:30, get there at 9:15, you can make the flight. Right. After 9/11, COVID happens down. 2 hours before TSA check, right? Now, when you get on the plane, okay, you have pilot go on, sitting amongst people, right? And it's funny because, you know, flying is very much like mortgage process. I'm gonna say how. Everyone ever have a bad flight before?
Yeah.
Okay, all right. You had a bad flight. When you got off, you told who? Everybody. Oh my God, you couldn't land a plane. The turbulence was terrible. But anyone ever had a good flight? Not really. It's kind of got on a plane, you know, you get landed, right? You get on the plane, assuming 2 things. 1 is gonna land, right? And 2 is gonna be a smooth flight. Would you agree with that? Right. Right, okay, right. And it's funny because you never really meet the pilot. You hear his name, but you never really meet this person. You're on a 747, he's in control of 260 lives. 757, he's in control of 140 lives. But you never talk to the guy. Kind of scary, right? You're getting surgery, talk to the doctor. You go under the knife, talk to the anesthesiologist. You don't talk to the pilot. You have to trust him. Mortgage process. Okay? Very much like that. You have a smooth mortgage process, it's uneventful. Nothing happens. Surprises in the mortgage process are a bad thing. I've been there, I've done it. I got into business back in 2009, you didn't need a license then. All right? But if you have a bad mortgage experience, a lot of turbulence, you gotta remember that. All right? So that's why I call this takeoff. We're about to go on an exciting journey. Next slide. The Players. Anybody know this movie? Old classic guy. I love it, right? Ben Stiller, all right? He had his team, I think you see the back on there. We got it, right? So whenever it comes to the mortgage process, there are a few players. Now, this is just the buyer side, and this is seller side. You have you guys, the realtors. What's your job? Can you help me out as an agent? Your job as a realtor.
Helping connect people to their dreams.
Okay, I like the definition. Okay, so your job is to find them the house of their dreams, negotiate the purchase price, right? Sometime act as a psychiatrist to the partners, right? Many hats. Home buyer. Their job is to annoy the hell out of them, right? Ask stupid questions, you know, make you nervous, call you at night. Okay. Then you have the mortgage team. Our job is to get the best terms for that individual, okay? Make them feel comfortable, right? And make sure the process is smooth, so there's no turbulence. And then the last one up there is a title provider. Okay, that's where closing happens. They're pulling title on the property, make sure there are no liens, judgments on the property. You'd be surprised when the stuff we hear, you know what I mean, about like maybe the abatement wasn't finished. Yet they advertise the property as having an abatement. Title pulls a tax, there's no abatement. right? So the important thing is all these people work as a team to make sure that your buyer has a good experience. Okay, when you send Alyssa, myself, Jeremy, Christian, lead a borrower, what are you doing? Saying, hey, this is a mortgage person, here's my patient. Right? Yeah, you expect it back when? About 30 days. With the right team. We're able to do that. All right.
So there's 4 types of mortgage originators. Correspondent, which is going to bring the loan from origination to underwriting, supplying and funding for closing. And then there's also Fed Charter, which is going to be like a local bank or credit union.
Top right, or the mortgage broker, typically our job is to shop the best option, right? And then you have something called a retail seller servicer. That's like your Wells Fargo, your TD Bank. They offer mortgages, but it's not their core service. Each of what credit cards, student loans, fee-based products. I'll say this: the top 2, the correspondent broker, the loan officer dealing with actually has to have something called a Safe Act license. Take an exam. It's a credit requirement. You have to know what you're doing. These bottom 2, they're what you call registered reps. They don't actually hold a license. They just work under the branch license as a registered rep. Okay, it's very, very important to know the difference because you want your clients to have a good experience when it comes to getting their mortgage. Okay.
And that's super important as well, because a lot of people just say, I'm just gonna use my bank, I'm comfortable with them, I have $100,000 with them. Whatever the case may be, it just might not be their best option. They might not have the best mortgage terms, they might not have every product and program that's available to them, so it's always good to get a second look from one of us in-house.
Process. Mortgage application. It's my favorite thing to do. Believe it or not, I got in the business, I was taking paper applications by hand. I pick them on the phone, I call them up. You know, I'll go through, ask them questions, and I'll try to get them to say yes as many times as possible. Right? That was the goal. Right? Now, it's digital. You can get a mortgage from your cell phone. The process is very, 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 very easy. Okay. Now, the next bullet point here says pre-qualification versus pre-approval. I'm gonna ask you some participation. And anyone tell me the difference?
Pre-approval is going to be a more in-depth process where we're gonna run credit. Pre-qualification is really just like the generic conversation, how much you make, what, what current debts you have, roughly you would qualify for X. So in order to actually go out shopping for a property, you really want to make sure that your clients get a pre-approval. Because everything can check out, but what if they have a credit score of 400 and they don't know that they have a credit score of 400 and they just get a pre-qualification? You could be showing somebody houses on a Saturday afternoon that has 400 credit. So make sure that you get a pre-approval, make sure that they run credit and do a thorough check of all their documents. Which actually brings us to the next point. So documents that you'll need for a pre-approval, an ID, typically 2 years worth of W-2s, and if they're self-employed, looking 2 years worth of tax returns, 1 month worth of pay stubs, and 2 months worth of bank statements.
So program reviews, once we gather the documentation, mortgage application is done. Kind of review for the best option, right? There's a veteran, the loan works best. If someone's self-employed, there's loans for that type of individual. So depending on what we find in the application, we qualify that person, that's going to determine what we're going to do. It's likely. So here are a few options. Let's walk you guys through the first 2.
Sure, so conventional is going to be Fannie and Freddie. And then government, you're going to have FHA or VA.
So bottom here, this is a new space. I'm gonna say one of my conspiracy theories, guys. All right. So I believe that we're what we call the rise of the gig economy. Right? Anybody know what a gig is? Need some participation, please. A gig. What's a gig? Was it a volunteer? Oh, what's a gig? Yeah.
Yeah.
Gig economy,
Yeah.
yeah, it's a non-committal job.
Cool.
Where that you get like maybe one instant of it, you might be repeat, but there's no guarantee of continuing.
So my theory is that these young millennials, although I'm considered one, right? I don't think I am, but I am, is that you're gonna see a rise in gig economy. Because people have to be secure. Thank God. What's that? Exactly. You never know. So the licensing in states down South California, what I see is this, right? Younger generation, you have a studio, they produce beats. I had a guy who was he was an arborist, right? Arborist, long business. Cut down trees for him, right? I went to TD Bank, he said, Brandon, they turned me down. I couldn't get a loan. I said, okay, see if I can help you. Simmons returns. I saw they turned them down. They were pretty bad. But I said, let me see your bank statements real quick. Send me 3 months, take a look at it. He said 3 months bank statements. He was averaging between $11,000 and $14,000 in deposits in his account. So okay, send me 3 more. Pretty steady. So I had his accountant write a letter saying he had been in business for at least a year. Okay, and do a profit and loss. I can qualify him on 90% of 12,000. For your approving for $400,000 house. You put 10% down in bank statement. Right now, as an arborist, his business typically flourishes from when? Probably from March to November. People aren't cutting lawn or cutting trees in the wintertime, right? So by traditional standards, that wouldn't work for Fannie or Freddie because you need to tier the tax returns, get a claim. Well, this gig economy on the rise, there are loan programs out there where people can still qualify to purchase, although it's not traditional income. So as realtors, right? I know I'm self-employed as well. I hate paying taxes. I don't give up with saying 30%. So I don't try to on purpose. So this is a great program for those individuals. Go sell. Right there. All right. And then private money. This is a newer offering that's out there where as realtors, if you're in the business, you have investors, okay? And they want to be able to buy property without providing a lot of documentation. Maybe it's a bridge loan or a fixed flip loan. A private loan is financing for investors to acquire property, okay? Often to invest in real estate. Rates a little higher, but it's very, very limited documentation. Okay? That makes sense, guys? Sorry. All right, so look at this picture. These people are excited. Offer accepted. Oh my gosh. Okay. Now, nowadays, not a huge deal, but in 2021, during the midst of COVID, got an offer accepted out in the county. Might have 20 offers, 30 offers, right? Got an offer accepted. You feel like you won a lottery, didn't you? Right now, it's funny because I have clients, so great, offers accepted, want to close. And I say, you know what? That's a great question because the mortgage process has started. Right? The mortgage process actually starts once you're under contract. All the documentation you get in the beginning is so we can pre-approve them to make sure you're not wasting your time. Okay? Now, talk about processing for a second.
Yeah, so now you go under contract, your client goes under contract, and now, like Brandon said, now the mortgage process will start. So the mortgage process typically is anywhere from 30 to 60 days. We can do it shorter, we can do it longer for new construction, but typically 30 to 60 days. And again, we'll collect all their documents, we'll send it over to processing, who will review the file and confirm that everything looks good and is in there for the underwriter. And then the file will go to underwriting. The underwriter will review all of the initial documents, as long as everything looks good, they'll send out a mortgage commitment. And off of that mortgage commitment, typically there will be some additional documents that are needed, maybe smaller things like an updated pay stub, or maybe they have a question about a large deposit, or like maybe smaller things that you need, like homeowner's insurance prior to closing. And then you send them in, you send the file back to underwriting, and then you get your close.
Want to have more faster, right? So underwriters, okay. I despise them.
So do I.
I don't like them. Here's why. Okay. underwriters tend to have preconceived notions about a file. All the time, it happens a lot. So our job as originators is to put the file together in such a way where we're arguing on your behalf. Okay, this person is qualified, here's why. Kind of like an attorney. Okay, we're an advocate for you. Okay, now a lot of times, the first conversation we have with the buyer, they don't tell us everything. Right? So when you're talking to your buyers out there, you're gonna say, hey, look, loan officer, you want to tell them everything. Okay, the body's in the closet, the money's being hidden at the mattress, you need to know about it. If you don't tell us this information and it gets introduced in the middle of the process, it can hurt the deal or make for some turbulent experiences on your trip to your destination. We don't want that, right? Now, as Alyssa said, the issue of called a conditional approval. Okay, on issue of conditional approval, it has conditions on it. Condition might be a pay stub, homeowner insurance, something very, very small, okay? And once those things are turned in, then we get what we call a clear to close, and we're clear for landing. The best 3 words that you can have is when I hear CTC, clear to close. It's like, we only have one in production right now, for the left. It's my favorite shirt. Did someone say it on camera?
It went really fast.
CTFC. Exactly, right. So again, I love the plain knowledge because you want to make sure you get to that destination safely. And by working with a licensed professional, or licensed professionals like us, we're gonna guarantee that journey. It's nothing scarier than being up in a plane, having turbulence, right? And 95% of the time, you can have a smooth flight. If the landing was horrible, if closing in goes smooth, that's all the client remembers, okay? So our job as mortgage professionals is to make you guys look good, okay? That way you're getting a referral and you're growing your business. So that's our piece. Any questions or anything that we talked about? Pretty straightforward stuff. Right there.
Yeah, that's one question.
Sure.
So I'm familiar with some of the requirements for like the FHA program, so for the other one, because I never heard of the 91 before. So are there any like stipulations on like what the appraisal has to be presenting, like FHA, like it's like shit being on a rail, like they want to appraise it at value, so are there like any strict requirements for like other loan types?
Sure, so a non-conforming loan or non-conforming loans as it's called, the conventional requirements are very similar to that of a conventional appraisal. So they're more lenient when it comes to appraisal.
So it's like a conventional loan.
Correct, but depending on what the property is being used for, like there's something called a fix and flip loan where we can get, it's called an as-is value. Well, the as-is value, we expect the property to be in rough shape. The chip and peeling paint, those types of things are okay because we know the person's gonna fix the house. All right?
Sorry, can I ask another question?
Here, what you got?
So have you ever dealt with an experience where someone came to you after they had a bad experience with a previous lender? Because I had a nightmare transaction about like a month ago. Like, do you recommend like how late is it to like switch lenders?
So it depends on your comfort level and theirs. We can get loans closed inside of a week or 10 days if need be. If the borrower's cooperating, like send a documentation in. So I have people say, hey, I want to switch. I have to find out on August 1st and closing is August 12th. And we're able to close on time. Okay. Yeah. So I mean, if it's the day before closing, I mean, obviously it's not gonna happen. I would say, hey, Mr. Seller, push the date back a week. But yeah. So, all right. Any other questions from the audience? Okay, was this good information for you guys? Your heads exploding yet? It's just getting started, baby. Yeah. The question was, when it comes to investors, what's the common loan that is used? Okay, now, it depends. So if someone is buying their first property, I think people say, hey, you know what, you want to be like an investor. I said he's a purchase multifamily, which is the primary, but at the same time, they're living in one unit, renting the others. So a person, the first time investor, that's typically the best route to go. Now, if they're an experienced investor and they say, hey, you know what, I'm trying to grow my portfolio, I have 4 properties. I no longer want to close up in my personal name. There's something called a DSCR loan. It stands for debt service coverage ratio. They can close it in LLC, they can put 20% down. The rates are in the 7s, which is kind of interesting. And doesn't report on personal credit at all. So as a more experienced investor, that type of loan makes more sense. Another question, I heard some chatter here.
You said it closed because the name of the LLC.
Yes, yes. Yeah, because what happens is,
Documentation, who's providing the documentation?
sure, so if the investor wants to close an LLC, you need the operating agreement, articles of incorporation organization, the good standing, as well as the answer from IRS, ID, assets in the bank, and that's it. Yeah, I mean, title appraisal, but yeah. No one can recommend.
10 days start from question.
Very, and it's funny because a lot of people in this environment are trying to pull cash out of their investment properties, but they're self-employed, they haven't filed taxes, doesn't require an income. So you can do a cash out up to 80% of the value of the property, depending on credit. Right.
Property has a character.
Yes, right.
Well, yes and no. I mean, you could be at point,
It's Jimmy.
oh, you could be at 0.65 DSCR and close. The rate's gonna be higher, but 0.65. Then you can still close. I mean, 65, if the mortgage payment, if the rent rather is 65% of the mortgage payment, so the mortgage payment is higher, we can still close it. It's just gonna be at a lower LTV, like 70% instead of 80.
By 65%, let me give you numbers real quick. Let's say the mortgage payment was $1,000, right? To get the best rate, you want to be at a 1 to 1.25 debt service. That'll mean that the rent, let's say the mortgage was $1,000, including taxes, insurance, principal and interest, right? And the rent was $1,250. That's a 1.25 debt service. That makes sense. So in the example Christian gave, the rent can be $650 and the mortgage should be $1,000. You can still close it. It's kind of scary, but hey, you can still close it.
Well, yeah.
Any other questions, guys? Right, so I think that wraps the first session. Thank you for giving me and Melissa the time of day to talk to you guys. Thank you. Thank you.
So we have a little bit of time before our next session. So if anyone wants to take a stretch their legs, grab some of the food, we have a whole bunch of food and beverages out there. And I believe, and I'll confirm for you in a second, but we're gonna be picking back off at 11. Oh, no, we're so 2 minutes, we're gonna start back. Another meeting.
Yeah, I'm sorry.
Capital D and A.
Yeah. Sorry, everything's saying, it's like, I wish I had that like a month ago.
I had nerves. Now works.
No.
All right, guys, thank you so much. We're gonna get started with the next section where we're gonna talk about converting renters into home buyers. All of you who were here for the first session, you should have gotten a ticket. You're gonna be good for the drawing later as long as you stay for the rest of the day. And if anyone did not sign in on the sign-in sheet, please come up to me. We're also gonna be sending another one around for each of the classes, again, just to make sure that the people who are entered in the drawing, we're here for the whole day. So without further ado.
Morning, guys, I'm back again. Stand before you to introduce our next speaker. This individual is my best friend. For the sole reason I even got to the mortgage business. He tracked me down for over a year to come to the office, have information that could change your life. I didn't believe him. But he did. His first year in the business, he was featured in Loan Originator Magazine as Rookie of the Year, having closed more than 30 million in individual value. As a realtor, closing just $1 million your first year, damn near impossible. He did it in a time when it was much like this. Here's a quote I like to refer to. Guys, can help me out here. It takes how many hours to master a skill? 10,000 hours. 10,000. That's Malcolm Gladwell. This gentleman has done it, I'll say it 4 or 5 times over. Right, he was featured on CNBC as the youngest and brightest under 40, having closed over 100 million in 1 year and over $1 billion in origination. I'd like to say he's from Delaware, but he was born in Scotland. Put your hands together for my best friend, CEO of Go Magnum Loans, Christian Best.
How's everyone doing? Good? Okay, so how many people like money in their pocket? I love money in my pocket, as much as possible, right? We're gonna talk about today converting renters into buyers. How many people are dealing with renters right now? Any, but show of hands, okay. All right, bigger commission check when it's a buyer, right? Sometimes. Yeah, a little bit, okay, all right. It's okay to talk about commission, guys, and don't buy. Are there any buyers in the room right now? No, see, there's a seller potentially in the room. Which is me. In case you guys didn't get that. No one's ever asked me, about, hey, Christian, are you looking for this or that? Can I help you? It's kind of interesting. I've worked with a ton of realtors. And this is what we're going to be talking about today is taking the opportunity by the hands, right? You can, well, actually, no, you did. And we are working together, so that's, sorry about that. Very unfortunate. All right, so these are a couple things we're going to be going over. The opportunity, the why, keeping it simple. Then we're going to actually talk about the money. The needs versus wants, that shouldn't be wants, by the way. The solutions, friend vibes, very important. All of you here are my friend, which is good. And we'll talk about that a little bit later. And then obviously any questions. Brandon's gonna help me out on slides here. Okay. So I'm gonna do it. Now, recently, Apartment List survey, they did a survey amongst millennials. How many millennials do we have in here? How many people know that they're a millennial? Okay. Don't know your. 90. No, not 90. 82. Yeah, 82. Who was born after 82? 1982. Okay, so they're good. So when they did this survey, right, of potential renters, okay, and was people in the marketplace looking for a home, 24.7% said that they would always rent, no matter what. These are what we call forever renters. Okay, now that's doubled since 2018. Okay, now 74%, 74%. So they thought they couldn't afford to buy. Notice what I said, they thought that they couldn't afford to buy at 74%. Okay. 42% said, you know what? I enjoy being flexible. I want to be able to go from here to there, here to there. So that's why I rent. Right? How many people have rented with no lease? How many people have rented and had a lease? How many of you know that you can't get out of that lease? So this idea of flexibility, which we will talk about a little bit later, is not exactly real, but it's real to them. It's real to the millennials that they did a survey on, okay? 36% don't want any maintenance costs whatsoever, right? Which explains why a lot of people will get new construction, okay? And 29% said it was financially risky. 29% said it was financially risky to buy a home. That's why they would be in rent. 29%, that's what they believe. This is not obviously based on fact. Remember, when you were doing a survey, we're getting what people's opinions. Okay. And from this, we're able to get some analysis, and then analyze this, and then come to some conclusions, which we're gonna go over now. Okay. Now, Redfin did a study. Now, here's the kind of counterbalance to that. These are the actual facts. Okay, so this is based on a study. This wasn't a survey, but a study. Okay, 59% of properties in Philadelphia, this is based on Philadelphia, are cheaper to buy than they are to rent. So 59%. Okay, median mortgage cost is $1,869, and the median rent is $2,000. So right away in Philadelphia, is it cheaper to buy or is it cheaper to rent? Cheaper to buy, right? Guys, I need energy to perform well. I'm one of those folks. I feed off of you guys, you know what I mean? It's really important. So please help me out, help me out. Okay, you good. That's my guy right there. How many know who that is? Okay, saying well, yes. Please, 9.56. 9.565. That's incredibly fast.
No, he's no longer, he's not tired, he's working, yeah, I know we hit back there.
Really?
Yeah.
Is it in Nigeria?
One thing, it was this year, like a few months ago, we got the,
No, it's.
I think the
The
name,
Olympics is in 4 years.
The Olympics are-
No lots.
What do you run today?
19.47.
Oh, you need to, okay, you do 100.
Oh, on the 200.
That's a 200, you got it. This was the, under, okay, all right, so, guys, when I am talking to people about sales, I love sales, I'm a sales guy. I'm the sales guy of sales guys. There are sales guys in this room that look up to me, not kidding. Anyway, but honestly, I love sales, right? Now, who do you want to sell to? You want to sell, who said everyone?
I think we both did.
Okay, great, yes, you want to sell to everyone, however, it's important that you know your market, right? Now, when you're selling to someone that's looking for your product, is that the easiest person to sell to? You think so?
Yes.
Okay, so let me describe that again. If I'm looking for your product, right, let's say the product is a home, am I just gonna go to you? Or am I gonna go to this realtor and that realtor and this realtor and that realtor? I'm gonna talk to a ton of realtors, right? That means that you're gonna have more competition. Not necessarily like competition. Except for these guys, of course, right? But I don't, okay, competition, we don't want competition. Not even these guys want competition, right? Nobody wants. You want to go in there, you want people to come directly to you, right? That's what I call active prospect. Active prospects, people that are just, they're all over the place. They know for a fact that they're going to buy a house and they're going to pick someone, and then you have to compete for the business. Nothing wrong with that. But that's who they are. Inactive, people on the sidelines. How many of you have heard from buyers that are on the sidelines? You can't get them off. You couldn't get them off the bench if you were Michael Jordan and you were like, hey, I need you to come court and play with it, right? On the sidelines. Why are people on the sidelines right now? Somebody just shout some stuff out. Blame money, spend it a little bit. Interest rates, credit, okay, credit score, thank you, yep. So inactive folks, people on the sidelines, okay, they're good people to market to, they're a little tougher. Because remember, they're on the sidelines, so they're gonna be a little tougher, but there's less competition because most people don't even know that they exist, and if they know that they exist, they don't really want to do it, right? So I go after a lot of people that are on the sideline. In fact, it's one of my favorites. But my most favorite of all are people that don't even know that they need to buy. That's who you need. People that don't know they need a house. Until you come along. Now, if I come along, right, and let's say I have an infinity stove. You have no infinity stoves. And I give you this infinity stove. I've changed your life, have I not? If I give you something that you don't know that you even need, and then it turns out you need it, I'm the one who changed your life. And if I'm a life changer, most likely you're gonna tell how many people about me? Everybody, right? If you're, just like Brandon was saying earlier, you're active, you're out there looking around, and you find someone and they show you a home and you get the home, to you it's kind of normal. That's what you were looking for anyway. If the process goes smooth or whatever, you might not tell anyone, hey, I bought my house while you're drinking coffee, right? If I change your life, or you're gonna, not only are you gonna tell people, you may call me with the person. My favorite referral are the people that text me with the person that wants the mortgage on the text message. This is my guy. Don't worry about it being 11:15. He's most likely up, but most likely I am at 11:15 at night. Not AM. All right. So competition. We talked about competition. Kind of did a little breakdown there. Now the people that don't know they need to buy, what they need is they need education. That's kind of what we're doing today, right? Education. Education is one of the easiest ways that I reach people to get them to work with me. And you can do the same thing, right? If you look at my Instagram right now, there's a lot of entertainment mixed with a little bit of education, right? Not big on just the boom, boom education. You don't see me get on there and say, hey, this is what this, I'm not gonna do that, right? People are thumbing through Instagram so fast. Like it's the average look through now is 2.3 seconds. That's how long you have to capture someone's attention. 2.3 seconds. So that's why my Instagram is entertaining first, right?
I would say that the education part of the while. There's a group of people that, there's a group of people that kind of looked over in my church, and it's the Section 8 category. I consider the Section 8 program in Philadelphia can actually use their voucher of home ownership. And a lot of people don't know that, but you ask them like, hey, how long have you been on Section 8? Oh, 2, 3, 4 years. Okay, you know, you can use your voucher for home ownership. Yeah. Then you can transfer a renter into a file for they'll rent for that year. Then you have them for about another 2 to 3 years, so they can practically get their credit right, finance right, then you can sell to them along.
That's a great point. Now we're gonna get into some of that a little bit later on, right? So separating yourself, how do you separate yourself? So I mentioned about being entertained, right? On Instagram, okay? The other way that you separate yourself from your competition, right? Is getting in front of people and speaking, right? The more people that you talk to, the more opportunities you have to sell yourself. Because that's what you're selling. Notice how I said, I didn't say separating the home. I said what makes this home different from that home or what have you. I said separating yourself, right? That's what you're selling at the end of the day. You're selling yourself. If you didn't know that you were selling yourself, let me be the first to tell you, that's exactly what you're selling, yourself. People are gonna work with you because they like you first, right? That's really important, okay? The importance of, and we're gonna get into more specifically into the why now. The importance of turning a renter into a homeowner, right, is also your future book of business. Most people are not buying one home and then calling it quits. There are people that are buying 2, 3, 4, then the empty nest, right? All of those things, you want to be the person's go-to realtor through their life cycle, right? There's a guy that I met that I've done his mortgage, I've done his children's mortgages, and I just did his grandchild's mortgage because she just became a teacher. He's known me since I first got into the business, way back when I was in little old Delaware. Okay, and nobody knew who I was. I was going knocking on door to door, right? Brandon's talking about he took paper applications. I was knocking door to door and I was take my application on my napkin, whatever I had, I was taking applications, okay? So Brandon, you go there, thank you. Okay. Keep it simple. Guys, you know, whenever you're talking to people that don't know that they need to buy, we're talking about renters primarily right now. You want to keep it simple, right? You know, the reason why you want to keep it simple is because they're already kind of timid about buying, right? If you start getting things, if things start getting too complex, what you're going to do is you're going to push them away. So you want to keep it as simple as possible. And you'll notice in the next slide or so that a lot of the points that I go over on why it's important to buy versus rent, I get the terms very simple. No big real estate or mortgage terms necessary. Okay, make it fun. Make it as fun as possible. You know, a lot of you again don't know how big your sphere is, and we're going to be talking about that a little bit later. How to make your sphere as big as possible, not just to include you and just the people that you know, but the people that they know as well, right? That's extremely important. And if you make it fun, keep it humorous, people are going to do what? They're going to like you. One of the easiest ways to let someone's guard down is through laughter. You don't have to be Kevin Hart, right? You're not too tall to be Kevin Hart. You know? And I'm too chocolate to be Jerry Seinfeld. Okay, but I try to keep it as funny as possible. All right. Some of you look at me like Jerry Seinfeld, but I don't know who that is. There are some young people in here that don't know Jerry Seinfeld, too old. Okay, anyway. And then you want to use some real life examples. Okay, so if you bought a home, even if you haven't bought a home, but you have maybe a close friend that's bought a home, you could kind of pull their life story in and kind of make it, not make it your own, right? But use their life story as an example, right? What makes people like you? What keeps people close to you is something called common ground. Sharing common ground, right? Some people have it immediately, right? I'm somebody I had to work at it, right? How to develop common ground with others, and you develop common ground through real life experiences. Memories are what keep us having, or what keep our friends close. You think of a memory that you have with a friend, just think of it, right? And it pulls you a little bit closer to that friend. So you want to generate an experience with them, and by generating the experience, if they're going back into their mind and reaching for that memory or experience for themselves, right? They're going to do that if you're talking about your own life experience. So you want to, if you've bought a home or you know someone that you're really close to this purchase home, you want to make that process as gorgeous as you possibly can, right? That's extremely important. We talk about all the experience that they had on their first Thanksgiving in their home, things like that. Okay? That's pretty much branding. Okay, that's one of my favorite songs. Look how baggy the pants were back there. I said it's 2002. Yeah, 2002. All right, let's talk about the money, right? Even if you're renting, right? You've probably heard, you know, at some point, hey, look, you know, people always talk about this money that I'm missing out on by not owning a home. How does it all work, right? So one of the first things I want to talk about is the value of the home continues to go up. If you're renting and the value of the place that you're renting goes up, does a landlord come to you and they give you some money? Hey, guess what? The value of the townhome just went up $8,000 last year. Here's $3,000. Thank you for renting. But it doesn't work that way, right? You want to explain that to the renter in the same way, right? You're not going to get any of that increase. You're making somebody else rich, right? Net worth increases, right? Simple calculation: assets minus liabilities equal net worth, right? Because the first thing people always say is the reason why they think it's financially risky is because they hear 30 years. They hear the word mortgage and they think, 30 years. Holy smoke. I mean, if you're in your 30s, even your late 20s, 30 years seems like forever, right? So you want to make sure that they know, hey, look, this is increasing your net worth, right? Even though there's a liability, right? You're getting an asset. Whereas when you rent, you don't have any of this. Right? It's not even on the balance sheet. You're on the expense sheet, you're just expensive, rent every month, right? Money back. How many of you rented and the landlord at the end of the year, because he got a tax savings, came to you and gave you half of this check? Because basically that tax savings, you know, that tax savings came from you. That's what I like to say to renter. I like to say it. I say it just like that. You know, that tax savings that they got at the end of the year, some of them say, what tax savings? Oh, let me tell you how the tax savings works, right? You're gonna get that, they're gonna get some of that money back, right? Because every time you pay mortgage interest, unlike rent, you get a dollar for dollar tax deduction up to $750,000, right? Okay. Fixed payments. People talk about inflation hedge, inflation protection. Well, what does that mean? Well, that means that with a mortgage, your payments are fixed, right? With rent, they don't fix those payments. I'm a landlord. None of the payments are fixed. Every year, we try to raise rent. In fact, when we don't raise rent, I say to Brandon, why can't we raise rent? Right? There's no renters here, right? Anyway, so yes. The payments are not fixed if you're renting, but if you have own a home, you have mortgage payments fixed, okay? Ownership is what gives you flexibility. It's really important that you stress that to the renter. See, renting, people think, oh, it's just a year, and that's the difference. We're confusing the terms, you see. They think 30 years, oh, I'm locked in 30 years. When they hear 30-year fixed, people hear fixed, and they think, I'm locked in for 30 years, I can't do anything. With rent, I'm only locked in for a year. Yeah, well, yeah, you're locked in for a year. If you renew that lease and you get a job offer somewhere, either the job has to buy you out of that lease, or you have to buy yourself out of the lease, or what have you. If you own a home, and this is what I tell the basketball players, especially the overseas guys. You own a home, and I hope I can get this video out to them so they can watch this. You own a home, right? Instead of paying $10,000 and $12,000 in rent a month, like a lot of the ball players do. Even if you get traded, you can rent it out yourself. Now you're making money on your investment, or you can sell it and make money off of what I talked about earlier, the equity. So the money aspect of this is extremely important. People want to get their hands on money, especially now. People want to get their hands on money. They want to change their lives, and you can be a resource for them. Need versus wants. Okay, here's how you edge up and get closer to the renter, the person that you're going to be talking to. So maybe someone in your sphere, right? Who would like to tell me what a need is? Something you can live without. Something. That's perfect. Something. Can someone pass this down? Like the man there. I go down here. Yes. Something you cannot live without. Things like water, right? Shelter. You can't live without shelter. Right? Now, what's a want? Who wants to give it a shot? Like,
Design something in addition to community, something like the baby happy, something that will make you happy, something that in addition to your needs.
Something- yeah, sort of, yes. So the way they describe wants, right? So a want is the little extras, right? But come along with the need. Don't get me wrong, you can need shelter, right? But do you necessarily need a wolf stove? Do you necessarily need a 10-car garage? Right? Do you need a heated garage? Those are really good. Heated flooring. It's another one, right? So you gotta separate the needs from the want, right? So when we talk about wants, we talk about quality of life, right? How many people love bottled water? Bottled water is fantastic. Who's a Fiji person? You can always tell. Fiji. No Fiji people. You say Aquapana. Saratoga. I'm a Saratoga person. Okay, wait. Okay, what water are you guys drinking? I've mentioned everything. Which one?
Smart water.
Smart water. Okay. I might sell this data to the water people, I don't think they know how much concentrations are. Oh, well, Chico.
Yeah.
Dear Lord. That's always picking on me. Okay, all right. Sorry, I did list some of the excessive list. I didn't realize that. Okay, sorry about that. All right. So. If anyone came to the follow-up class that I did not too long ago, right? We talked about questions, right? You want to ask more than 21 questions. When I was a real estate agent, this is a long time ago, I did both, right? I was dabbling in mortgage and dabbling in real estate at the same time, until I got caught by the CEO of the mortgage company, and he was like, "Christian, what is this that I hear that you sold like 12 homes last month?" And I was like, "What? Me?" And I got in trouble for that, couldn't do that, right? But when I was, it gave me a really good experience, right? When I would ask the customer, I had a list of almost, I think it was like 75 questions that I would ask. Like, really important questions, like, what do you enjoy about your current place, right? Sometimes I would go to their house where they were living and walk through it, right? What would you improve, right? If money was no object, I wrote you a check today for $2 million, right? What's the first thing that you would do to change from where you live, right? Now you have an idea of what they want, where they are currently, and where you want to be is hopefully somewhere in between, maybe even closer, right? And when you're talking about, and you're talking from a place of experience, and you're getting to know them, this is where you really can start to build some rapport, right? When you're talking about needs and wants. Let me go to the next one. So some of the solutions, right? Now, there's a lot of times where if someone's renting, they may object to say, "Hey, you know what? I'm cool with rent. I'm good. I'm fine. It's too expensive for me," right? Well, immediately what you want to do is you want to meet that with empathy. You never want to be on the opposite side of the client. You want to be on the same side. I'm with you, right? The only way that you can be next to them when they give you an objection is to be empathetic, right? To agree. If I'm in agreement with Brandon, we have trust right here. Now, all of a sudden, I'm not the person that's trying to convince him to do something. We're working on it together. This is why I have this diagram. You know, when you're overcoming an objection, it's not that you're forcing them. No. You're bringing them over to the other side with you, because this side of the mountain is better. At least we hope. I can't really see it, but we hope, right? So that transition is important. Because immediately after you agree, you can't just stay in agreement, because if you do, now you're on their side, and you also believe that renting is the right thing to do. Right? That's not why we're here. So now I have to transition. Find out what their objection is. I don't have enough money, it's too expensive. Well, do you have your first last month of security? Yeah, of course I got that. Well, did you know with that I can get you close and you may not even need all that? I always ask the question, hey, what if I can get you in a house with no money? To see what the response is. Is that really the objection? And then we can overcome it, right? So if they can't afford it, empathy, getting on their side, we built that rapport already. And then the next step is, well, what if? That question, that transition. I always ask a question in transition. Because when you ask a question in transition, you're gonna get, especially if it's open-ended, you're gonna get all of the reasons. That's what you want. You want the no, and you want the reason behind it. Really important. I'm about to wrap it up, don't worry. Jeremy said I could have some of this time anyway. See that? Thumbs up.
Keep going. Yeah, did a great job. Look at my slides.
Yeah. All right, so friend, so this is one of my favorite shows, Friends. How many people? I don't even want to do this. How many people? Okay, good. So, all right, so if you don't believe me, Joe, Chandler, Monica, Rachel, Phoebe, I'm Aunt Ross. It's my dad. So, friend vibes, right? How many people are aware of what a spirit is? I want to talk about this real quick because this is so important. human, right? I haven't told you yet. Sphere of influence.
What was it?
Sphere of influence, what would you say then?
It's my circle of anybody I know and anybody they know. My contact.
That's fantastic. I think there was one other person to answer something I didn't get. Was it you? Oh, okay. No, I'm talking about earlier. I thought you asked one.
No, I didn't.
So is there?
Oh, okay. All right, you got it. But yes, that's exactly right. The people that you know, right? And the people that they know. Right? Wait a minute. What about the people that you don't know that you know? Because there's a saying out there in sales. You want to know what you know. Right? You want to know what you don't know. And you want to know what you don't know, right? So I always have a diagram up there and I don't have a pen. And I'm running out of time. But there's a circle, right? That's your sphere. All the people in are people that are within arms like deep in the phone, call them, they're right there. Right? Oh, it's still up there. Perfect. Yes, and even erase it. That's fantastic. So that's you, Bob. Okay? No, this is you. This is Bob. Right? People around you, those are your friends. And then Bob has friends, and you guys have what? Mutual friends. One of the things I love about Instagram is it tells me who your mutual friends are. So I can go in and follow them too, and they can follow me back. Now they know about me. That's why I said everybody in here is my friend, because not only do I follow you, but I also follow your friends. And then your friends start following me. One time I did alone someone's roommate who was in the mortgage business. Roommate was in the mortgage business and I did their loan. Right? They were roommates. There we go. Now, the people that you want, see this guy, see Tim here? That's who I want. I don't know that I don't know Tim. The reason I don't know that I don't know him, we're not mutual friends. He's in Bob's circle, but I don't know. Right? And then when you go even further out here, now you really don't know. Right? And that's extremely important. That's why you want to put yourself, see how I move from here to here? Right? You do that through meeting as many people as possible. Go to meetup.com, join as many meetups as you can. Things that you actually like, right? That's important. So when you go to meetup.com, don't join, skydiving. If you have no interest in skydiving, it's scary. Trust me. You know, I did a mock skydiving thing and I didn't do it. I was just like, this is crazy. Correct, okay? Go. Right? So coffee, things like little lunch. I'm having a dessert and champagne show, right? At a house, I just walked into that house and we were doing like an open house. Next thing I know, we're sponsoring an event. Okay. That's actually happening on the 17th. Talk beyond real estate. The people that you know, your friends of friends, you have to talk beyond just real estate, right? If you're a walking salesman or a walking billboard, nobody wants that. Especially on Instagram. Like if you're constantly just selling, no one wants that. They want to know about you. What do you do? What did you do over the weekend? Right? What are some of your interests? Or do you have any shared interests? Do you have any shared TV shows that I'm binge watching? Like the movie that literally made me cry the other night. I literally, and I knew one of these days that I was going to break down, and it was the scene in there with the bottom and the side, and it just tore me up. Honestly, anyway, I don't want to give the movie away. I wrote a series about it. Really, you want to be the friend, not the villain, right? I want to be your friend, not necessarily your mortgage broker. I don't want to be your mortgage broker. I want to be a friend. Right? When you have an issue with a deal, or you have a need, or a friend of yours tells you, hey, you're buying a home, you want to refer them to a friend, not necessarily just a service provider. There's 1,000,001 service providers out there. But people hold their friends close. Okay. Now, are there any questions? I know I ran a little bit over. Are there any questions? I would love to answer them. No? So they covers,
And like realistically, how much that is a cold call? 'Cause I really like it.
I do it, well, I used to do it all the time. Now I have sales guys that do it. But, like I said, the more people that you talk to, the more opportunities, it's all a numbers game, the more opportunities you're gonna get. I mean, I had a class the other day, we were talking about calling expired listings. I said, how many people call expired listings? And I didn't get any answers, right? So expired listings, you know, what if you call that cold calling, you know, whether it's internet leads, what have you. The more you start to talk to folks, the more you're gonna develop your craft. And then it's gonna be lickety split, easy. The very first day that I hired Brandon, way back in the day, before he became my partner, my business partner, right? He was sitting across the desk from me and I literally handed him the phone. I said, I wanna see you sell this. He's like, "What? I'm not ready to do any of this. I just threw him in the water, okay? I don't do that now. Now we have training and all that, but I didn't know any better.
That was the training.
That was just a trade. It was just me. And he came to my office and I was like, oh, you finally came to my office. I don't chase him down anymore. Here's fun. Do it, all right?
A lot of objections, like, my research, I don't have enough money to put down.
Yes.
And then I say, as little as 1%, some of the legal programs coming out. And then their other objection is, you know, but I need my monthly mortgage payment to be X.
Right.
So how exactly do you handle? Because I have a lot of fire and I'm going, it's interesting that you just want to stay a little bit more so I can afford now, so my monthly payment is something that makes sense with my salary.
Now, so there's two ways to approach that. For someone, let's say, that is going to get like a raise next year, following year, like there are certain jobs where, well, commissions, that maybe they'll start earning commissions the following year. You know, there's the buy down, right? Buy down where the seller can pay for that buy down, or the lender can pay for the buy down, right? And we can get their rate really low for the first year, and then it may go up in the second year, right? There's also low arm kind of products, right? Where their rate's gonna be fixed for a shorter period of time, right? At a lower interest rate, right? And then now their payment might be at their budget, right? Well, one of the more important things that I like to do, I have a diagram, right? That I think I sent that to all of you. And it kind of shows someone like where they're going to be as far as how much rent and how much that's costing them over like a 3 to 5 year period. And then what the mortgage is doing over a 3 to 5 year period, right? So when they see how much money they've actually lost during that period of time, and these are like real numbers, so I'll use their real rent, their real income, all of that. And then actually look at those numbers, you'd be surprised. When I talked to someone the other day, they were just at $2,600 in rent. I showed them that in the next 4 to 5 years, they were looking at about $148,000 in losses, right? Compared to paying $2,700 for a mortgage, right? And then the other way is through just a budget, right? Hey, let's work backwards and see where you are, because it doesn't matter. I can show someone all the numbers in the world, but if they're not comfortable within themselves, it's not going to matter. And at that point, what you want to do is you want to budget. But at the end of the day, we'll always try to find a solution for someone's friend. Right. I still think it's done. Yeah, sorry.
My friend went to work, but she was we were searching for a home and everything's going well, and then she said that she would quit her job and then it's still like trying to look for it.
Now, you know, that's actually happened during the process to me before. Someone just quit their job and didn't tell us, and we were like, hey, what's up? Quit your job? They're like, yeah, is that okay? No, it's not okay. We gotta need that. Now, if they are going to quit the job in 90 days, but they get an offer from another job, we can get them anywhere, but they have to have a written offer. Right? Which is really easy to get. The offer, not the job. Yeah, the offer letter seems to get another job. All right, thank you so much. I really. Yeah, go to the right.
Yeah.
All right, we're gonna roll right into overcoming objections and winning deals with Jeremy Dirk, the Durkin Group. Thank you guys so much for covering this. You know, this is gonna be really helpful.
Yes, how's everybody doing? Nice to meet you. I think I met some of you and have not met some of you yet. My name is Jeremy Durkin with Cross Country Mortgage. I've been in the business for 20 years, primarily mostly here in Philadelphia. Cover the main line, the Jersey Shore, the counties, but just the local regional lender. Jonathan Devon is also with Cross Country Mortgage. He's been in the business for about 10 years. And Vicky Cameron in the back, also with Cross Country Mortgage too. And been in the business for about 10 years. I think he's a top lender in the city as well. So we covered a few things already. We covered the basics, the 101, mortgage products, programs, what's available, the players, who the lenders are, what their roles are. Christian and Brandon, great job on converting renters into home buyers. We're gonna move it one step further into actual objections that your buyers might have, in addition to what we've already talked about, against buying a house. And also for a resale, how to get your offer accepted this fall, because we have to kind of look at the market. You know, the spring is gonna be different than the fall, right? So it's August. Right now, we need to focus on this fall and this winter, and what we're gonna do to get more buyers under contract this winter, this fall. So an objection is, as a seasoned loan officer, as a seasoned realtor, you would really want to be equipped with the answers. So you have a buyer that comes to you, and you know, we're gonna talk about buyers because we're not really on this side, right? You need to have the answer and the solution for that buyer. We love those questions. You know, the buyer says, I don't have enough money to buy. Yeah, you know that you don't need that much money. Or I can't, I need to sell my house first before I can buy the next house. Do you really? You know, that was the American dream, right? It's you buy a house, you build up some equity in the house, make, you know, and then you use that equity to buy the next house. That doesn't really exist right now. You know, and I've seen that for years. We need to figure out ways to get creative. Back in 2019, 2020, 2021, what were we doing really? We were facilitating requests, right? We weren't really, it wasn't that hard, you know? The buyer came in, the offer, you know, now we need to get back to selling real estate. We need to figure out ways to turn that renter into a buyer, or ways to figure out how to make a deal work, right? So we're gonna go through in about 20 minutes, some proven, tried and true examples that, and as a mortgage lender, we do a lot of business. We see hundreds and hundreds of transactions a year. We're part of hundreds of transactions. So I'm gonna cover some specific ways where you can really work with your buyer on how to get their offer accepted versus a competitive offer situation. So what are some of the common objections that you hear when submitting an offer? We have a list we put together. You go next slide. So waiving the home sale contingency, bridge loans, recasting, 7-day commitment, quick closing, seller guarantee. We'll call the listing agent up, appraisal before the second deposit. I have about 20 minutes here, so I'm just gonna get started on that. So waiving the home sale contingency, I gotta love that one. You have a buyer that's putting an offer in, they already own their house. They want to sell the house, right? I already know that they can't sell the house in a competitive seller's market, which we're in right now. If there's 10 offers going in, and maybe even in the counties, 20 or 30 offers going in, right? The seller is going to look at cash buyers, right? They're going to look at maybe a finance buyer, but cash buyer's a little stronger, right? But they're definitely not going to look at a finance buyer with a home sale contingency is going to be at the bottom of the pile, right? So we need to move a financed buyer who has a home sale contingency up the ladder, right? So, you know, the number one way to get an offer accepted is always gonna be somebody, and we're giving out $25 Amex, Amazon gift cards too, so. But what's the best way to get your offer accepted? It's not on any of these slides right now.
Highest offer.
The price, that's correct, yes. Well, you're support staff, you're not supposed to get.
I just got my link.
There you go. All right, we got one. The highest price is always gonna be winner, right? So that's your job. You have to talk to the buyer about the highest price. So when we come into play, the next thing is gonna be a few things. One of the things that we will have a conversation happily about, which definitely works, and we're very successful at that, is talking to your home buyer about having the confidence to waive their mortgage contingency, right? So now they're basically going in as a cash buyer, even though they're getting a mortgage. So what does that exactly mean? That means that page 3 of the agreement says blank, right? They don't have the money to pay cash for the house. So the true cash buyer can document the bank statements to show that they have money. You know, if the seller is really analyzing the offers on the table, which they really are, to be honest. But if we can talk to that buyer, we've never had a bid us once, we've never not closed on time, pre-approved buyers have always gotten to the table. We can have that conversation with a buyer who's got a 780 credit score, he's put 25% down, he's got money in the bank, his parents have given him a gift, he has a, you know, he pays up W-2 job. He's got to waive his mortgage contingency, right? He's got to go in cash, which means he left page 3 of the agreement sale back, which means that they can't get their earnest money deposit back if they don't get the mortgage, but that doesn't happen. So we will try to do that with the buyers as well. When the buyers are getting a mortgage, how do you get somebody to waive their home sale contingency? Meaning that in order to go to closing on the next purchase, they have to sell their house first, right? Now, it's a seller's market, so the house is probably going to sell fast, but it doesn't matter. When they're going in with that offer, they need to waive the home sale contingency. We can walk them through that. It makes the offer stronger. You can close faster now, right? So you don't have to sell the house. Much better chance of getting the offer accepted. I don't remember, and again, we do hundreds of these a year. I don't remember the last time I had a finance buyer with a home sale contingency offer getting accepted. Unless it was a, you know, a certain location. So how can we do that? Because the buyer is going to say, what do you mean? I need the money from the sale of my house to buy the next house, right? There's a bunch of solutions to that, which we're going to cover now. We'll go back real quick. So who knows what a bridge loan is for a $25 Amazon gift card?
Bridge loan, between selling your house and buying.
Yeah. It's a loan that we provide. That we're gonna put on the property, the departure residents, give them that money to buy the next house. And then when they buy this house and sell that house, which is right after closing, that bridge loan, which is a short-term loan, which is a gap loan, so we get a $25 gift card, gets paid off. So the banks, and we offer a, so we'll go to the bridge loan. So being equipped with this basic information will handle all the finance stuff, okay? When it comes to financing and financing conversations, you want to have an idea about it, but you don't want to have the conversations. Just dish it over to us. We'll take care of the whole thing. Anything finance related, you got to go to a financing expert, right? So a bridge loan is something that we can give to your buyer. You have a $500,000 seller who has $250,000 on his house. We can give them $150,000 towards the down payment of the $800,000 house, which is 20% down, right? So now the buyer and this buyer probably has 30 to 50,000 in cash, right? Probably has some money in the 401k, but doesn't want to use that. The money he has is in the equity in his house. So we got to give him a short-term bridge loan. We can give him a short-term bridge loan. We're basically giving the buyer the financing. And we're also giving them 20% down for the purchase of the house too, okay? It's a great program. So that's how you wanna overcome that obstacle, is how can I buy the next house without the money for my current house? A bridge loan is a solution. The next one that we'll see, if anybody knows what that is, who knows what a recast is? This is very important, you're gonna wanna learn, there's gonna be a lot more recasts going forward. Anybody know what a recast is? And buyers don't know what recasts are either, and some lenders don't know what recasts are too, so, recast is where the buyer can, it's different than a refinance, so somebody buys the house, they put 5% down, let's say, right? So, what we were just talking about, you can avoid the bridge loan by financing 95% of the buyer's next purchase. Again, the buyer says, I don't have the money for the purchase, I need to use the equity in my house. That's not true. You can buy the house, put 5% down. As soon as you sell that house, what happens? As soon as you sell your house a month or two after closing, you have $200,000 in the bank, right? From the equity of the house. You can apply that $200,000 towards the house that you just bought for $800,000. We'll stay with this same sample. And take your mortgage from, let's say, $750 down to $550 with a recast. So it's a one-time payment to the new servicing company. There's no fees involved, it's a couple $100. The lender, which is us in our case, will recast the loan, which means we'll lower the loan amount and the payment by $200,000. So that your payment can go to where you want to be, okay? So the buyer doesn't want that higher payment, he doesn't want to pay that 5% down payment. He only will have to pay that for maybe a month or two. He can recast the loan, get the loan balance down from $750 to $550, and his payments where you want it to be at. And we'll have those conversations up front with the buyer, like, hey, you might have this payment for a month or two. So the payment, when you buy a house, when you buy a lot of things, the payment really is what you want to look at. We'll come up with a payment solution for the buyer. So, all right, nobody knew what a recast was. What's that? So 7-day commitment. Another way to help get your offer accepted is speed, right? The seller wants his money. If you have a 15-day closing versus a 30-day closing versus a 45-day closing, the seller is going to look at the, again, we're just with the same example of there's 10 offers on the desk. If we can do a quick closing, that's going to win. We see this win all the time. It happens all the time. The seller, the listing agent might be pushing a 30 or 45-day closing, which say just do a 15-day closing. Let's get the seller's money. The seller's like, that's great. I don't know what's going to happen. The market's crazy. Let's do a 15-day closing, 7-day closing. So what that means is we'll get the commitment faster. And we can get the commitment before you're under contract too. So the buyer can actually do a formal application before you're under contract. We can get it fully underwritten for you. That makes a faster closing. There's no more concerns. The seller is going to see the quick commitment. If other lenders, I guarantee it, they're going to be doing 15 and 21-day commitments. They see a 7-day commitment, great. That's a better offer. Quick closing, kind of just covered that. This does work. I think we all can close in 15 days, 100%, right? And that's not something that a bank can do. It's not something that a lot of the internet lenders can do. If you can position the seller and the listing agent in a scenario where they can get paid faster, that's going to help your offer be accepted too. Seller guarantee. Has anybody put an offer in with a seller guarantee from the lender? Does anybody know what that means without looking at the screen? With our offer, assuming that we get the buyer approved ahead of time, we'll give up to a $5,000 seller guarantee that the loan will close on time. Pair that with your offer, we can give you a letter for that to go with it. So now you have a quick closing, no home sale contingency, quick commitment date, and we're going to guarantee the seller with $5,000 if the loan doesn't close on time. Now we're getting somewhere. we're looking better than the other offers. The sellers love it. It's not that common. We've never had to pay it because we've always closed on time. Just throw it on there. It's really popular. Another thing that we'll do for you, and this is great, assuming the sellers and listing agents know that you're getting a mortgage, right? We'll call the listing agent. We're all local Philadelphia lenders. A lot of times we'll know the listing agent personally. We did a deal with them in the past. The other lenders aren't doing it, right? So we'll call the listing agent, say, hey, thank you for taking this offer. We really appreciate it. I know you have a bunch of offers in. We have this buyer fully verified. This is an easy loan to close. Let's do a quick closing. If you have any questions at all, we have a 20 debt ratio, 750 credit score, you know, low DTI, whatever the specifics are for the buyer. They love that. They get to ask any random question they want. They say, I really appreciate that. Nobody else is calling in a multiple offer situation, right? So we'll call the listing agent up for you. Just let us know when the offer's in. That's going to help your offer be accepted. Appraisal before the second deposit. So your buyer might say, what if it doesn't appraise, right? This slide should have been back maybe 4 or 5 slides, just because we're already kind of towards the end of it. But typically we're doing 2 deposits, right? A first and second deposit. The first one's small, 1,000, 5,000. The second one might be bigger, 20 or 40,000, something like that. The buyer is okay with that first or $5,000 check, right? But they're not so sure about the $20,000 or $40,000 check. Second deposit's usually 7 or 10 days out, right? We can get the appraisal back and the commitment in before the second deposit's in. So if the appraisal doesn't come in at value, then the buyer didn't get that second deposit. I don't love this one, to be honest with you, because nothing's really not appraising in Philadelphia. I can't remember the last time I didn't have a house appraised in Philadelphia. Rarely, and we have local appraisers. We know them personally. I have 4 appraisers. I know them. Been working with them for 10 years. You're gonna have success with the appraised value. If it's the first house selling in the main line, because one $150,000 over we're asking, you might have a little bit of the appraisal questions. But this is something that we can talk about the buyer. But getting the appraisal back before the second deposit also is a good strategy. So Jim is going to finish up the second half, and we'll get you guys out of here by 12. But does anybody have any questions or thoughts on some of that stuff?
With the refi, how are the interest rates any different if they are from the convention?
Yeah, so it's not a refinance. So the recast is the same exact interest rate. The terms aren't changing at all. Good question. Yeah. So you're just taking the loan amount down, and the payment is being reduced based on where you paid your loan amount down to. Interest rate's the same. There's no closing costs. There's no title fees. There's no lender fees. You're just sending in a check. Somebody's processing lower loan amount, and then the payment goes down accordingly. Anybody else have any questions? Thoughts? Mr. Goldstein?
Or do you want to be adding on it further? Brandon, you want to start on it?
Thanks, guys.
Done. This is what I'm looking at, and I'm looking at your faces, and the word that occurs to me is stunned. It's a information overload. I think I want to just compliment everybody here. I think a lot of information was presented. What I liked about it, before I get into giving people money, what I liked about it is that it was a good mix of technical stuff, some mortgage detail, but much more about people and how to relate to people and how to become friends with people, which is a great point, because you're not selling houses, you're selling yourself. And I think that's a great point. So Jeremy, I want to talk to you about all these people that you have that are buying and have 750 FICO scores and $200,000 in the bank. Because they probably don't have to pay attention to this part. So we were talking about objections, overcoming objections, and a lot of times you were talking about renters and what are their concerns. The survey information was great. I don't have enough money to close, so that's specifically what we're going to talk about is cash to close. I think that's, to me, in my mind, my informal survey that I did in my head this morning, that's the second biggest objection that people have. The first one is fear, just generalized. They turned the TV on and they found out that house prices are plummeting and interest rates are skyrocketing, and it's a terrible time to buy. So Education Day, everybody's here, great turnout. And that's because I think all the people in this room realize that our main job is to educate people who turned the TV on and heard that house prices are plummeting and everything's terrible. So to me, that's the first thing that we all need to focus on. But you do need to have money. So we want to talk about a few things that you can do to help people get over the hump and understand that if they have a first month and last month rent payment, that they also have enough money to buy a house. So if somebody would pick. So I think National Association of Realtors does a survey every year, and somewhere around 40% of the people that they survey believe that you must have a 20% down payment. Obviously, everybody in this room knows that that's not true, but that's piece one of educating about how much money do I need to buy a house. So conventional 3% or less if you have a special program, FHA 3.5%, VA nothing, USDA, which is a rural program, which won't help you in the city. So it's a huge difference. If you're putting 3% down on a $300,000 house, that's $9,000 you need. If you're putting 20, you think you need 20% down, that's $60,000. That's a big difference in that chunk of change. Okay, next slide. First of all, any general questions about cash to close that anybody wants to ask right now or throw in, or just keep rolling, because I am the person standing between you and lunchtime. All right, I'll keep. So Seller Assist is a very, very powerful tool, and it's a way for you to drastically reduce closing costs. It also, it's a negotiable item, so I don't think I would have spent much time talking about Seller Assist in 2020 or 2021 because it wasn't happening. But I do feel like in Philadelphia now, there's a little bit of softening in the market, and there is opportunity to introduce Seller Assist. One of the things that, and I want to compliment all the lender partners that KW has put in front of you, because everybody is experienced, everybody is licensed, everybody is having multiple conversations every day, and they know how deals get done. So one of the things that a lender should never do, and I've seen it happen, is the lender introduces the Seller Assist early in the conversation in a market where there is never going to be a Seller Assist. So it's a partnership, and you have to work carefully together. So you're in a market, negotiable item, Seller Assist is a possibility. What is it? So depending on the program that the mortgage program that your borrower is going to be in, you're going to be able to ask the seller to pay a certain percentage of the closing costs. If you're doing a 5% down conventional deal, you have to limit the Seller Assist to 3% of the sale price. So let's go back to a $300,000 asking price. Let's say that somebody is asking $300,000 and you have a buyer who says, I want to bid $290,000. And again, I would agree with Jeremy. I have not seen any problems on appraised value in Philadelphia in a long time. I probably shouldn't say that out loud. So instead of offering $290,000, they offer the full $300,000. If they offer $290,000, they're going to save themselves, let's say $50 a month on their payment by getting reduction in sale price. If they offer $300,000 and they ask for a 3% Seller Assist, they're going to reduce their out-of-pocket expenses by $9,000. Somebody says to me, would you rather have $9,000 right now, or would you rather I give you $50 a month until you move out of the house? I know my answer. I didn't give it a question. So, and then depending on the program, again, you can ask for bigger Seller Assists. FHA has their rules. VA basically is if you want to give money to the veteran, we'll let you give as much money as you want to use. So it's an important tool for reducing the close risk. All right. So there's two other things that I want to talk about. And then it's food time, is down payment assistance programs and grants. So before I get into a little bit of the nitty gritty, let me kind of distinguish between the two. So a down payment assistance program is typically a second lien that is forgivable. Sometimes it's called a soft second, and it's money that is given back as long as the buyer meets certain terms. There is going to be no repayment required. So it's a way for the closing costs and the down payment to be drastically reduced. Different than a grant. So a grant is, we're going to give you this money. There may be some counseling, there may be some income threshold that you have to meet in order to be eligible for the grant, but you're going to be given these funds towards your closing costs. We've had a few deals in here with some specific grant programs that we're going to talk about in a second. The one thing to be aware of with a grant program is your buyer is going to have to pay taxes on that in most cases. So it's considered income in the year. So one program that I want to highlight is Pennsylvania Housing Finance Agency, PHFA, has a program called KFIT, where they will give up to 5% of the sale price towards down payment and closing costs. And in that first month, last month example, guaranteed rate closes deals pretty much every week, where the buyer put a $2,000 earnest money deposit in some cases and got half of it back, because the total out of pocket that they needed between the KFIT program and maybe combining it with a seller assist or another grant program, they ended up $1,000 out of pocket to get into $160,000, $175,000 house. So I can't stress that part enough, that in the overall world of educating people, renters, I think in particular, that when people say, I don't have enough money to buy a house, and you say to them, well, how much money do you need to buy a house? I don't know how much I need, but I don't have enough. So they actually do that. Okay. So a couple grant programs to be aware of in Philly. The Philly First grant program. It is one through the city, through the counseling agencies. It's income restricted, but you can make $80,000 and be eligible for the program. And it's a way to be eligible for $10,000. If your customer looks into this program, it takes a little bit of time for them to get approved, and they have to be approved for the grant before they sign an agreement of sale. So if you have somebody who's on a quick timeline, I'm not sure that this is going to work for you, but if not, it could. Okay, I'm rolling. All right, so there's a couple of grant programs specifically. Guaranteed Rate has a program. It's through Fannie Mae, and it's called the Special Purpose Credit Program. The buyer's going to have to be able to qualify for a conventional loan with 3% down. They're going to need to have a 620 FICO score. And we've used this program here. What I like about this program is the first way that you check eligibility is it's based on where the customer lives right now. So if you're working, who's working with renters right now? Do you know their address? Yes. All right. If you know their address, you can call Alyssa or I, and we type it into our lookup tool. This happened on a deal 2 days ago with me. Was introduced to somebody, looked them up. They live in a census tract that's eligible. They're trying to buy a house for $300,000, 3% down. So they're doing a $290 loan. They're going to get a almost $8,000 grant. And since they live in that census tract, there's no income restrictions. So they can make $150,000, $250,000 a year. It doesn't matter. As long as they qualify for a conventional loan, and they live in that census tract. I honestly don't understand why Alyssa and our papers aren't bleeding from typing in rental addresses to see if we can give these people money. So make my fingers bleed. So it's, and in addition to handing them a grant money for almost $8,000, they're gonna be in an affordable lending program where the interest rates are more favorable than if they're not in that program. So we really like this program. It's a very strong program. Dick? Okay, and then Guaranteed Rate also just recently came out with a 1 down program. This is not geographically restricted. And what happens is we will give them up to $2,000 towards the down payment and also $1,000 off of their closing. So again, this is a grant. They do have to pay income tax on it. But it's also a very good program for certain buyers as long as they qualify for a conventional loan with 3% down. So there's a lot of money out there to be given. What's happening, I think, in my view, is that the agencies, Fannie Mae and Freddie Mac, are under a lot of political pressure to appear to be helping buyers, first-time buyers. And it's out there. So it's, you know, it's a crazy market. The interest rates are high. There's a lot of things that are, I think, unfavorable right now as far as making it a little bit harder to get homes sold. But this is one area where if you take advantage of it, I think it can really help you close some deals. So that's my piece. Any questions on how to get us to give you money? Yes, sir.
Are some of these programs, mainly the ones that are FHA, are they like combinable? So for example, like if I did like the Philly First Time Home Buyer Grant, could I combine that with another grant program?
Yes. Yes and no. So sometimes, let's look at each particular loan. So for example, I had somebody who was trying to do a renovation loan and they wanted to use KFIT. That doesn't happen. Somebody who is doing KFIT and does the Philly First grant, that does go together. So I'm going to take that question, and you've asked really good questions to all the lender partners, but and I don't have anything to give out. I feel really bad, except like $300,000 in loans to your customer.
You can give them one of my t-shirts.
Oh, yeah, here. So here's the big point in what you're saying is that if you're an agent, and how many people are in the room that have been in the business less than a year? Okay, so it's impossible to be just everybody to everyone. And the key to me, in my experience, what I've seen the agents who truly succeed is they use their resources. So they're the point guard, if you want to use a basketball analogy, and they've got their team, they've got their lenders, and they bug the hell out of their lenders when they're learning their craft. They're calling their lenders, they're learning about everything, and they're a sponge. So you can't know, when you're talking to somebody, you can't know that you can combine this grant program with that program. If you try to tell them, you're probably going to get it wrong. But you can say, I've got, all these resources here, and what's the question? Let me get an answer for you, and then you put them in touch with whoever is appropriate. So, but yes, they can. All right. So hopefully this was helpful information. I think, I don't know who our master of ceremonies is, but I think the next thing on the agenda is lunch. And then there's going to be a bit of a panel discussion. So thank you, everybody.
All right, guys, we're gonna take a quick, I think it's gonna be 15-20 minute break for lunch. We still have some chicken and donuts out there, but I think that there's actually going to be a lunch and not just chicken and donuts. Help yourself. Yeah, that's all I have to say. Master of ceremonies. I love that term.
Yes. Yeah. Yeah.
Stop right now. It's slow. Yeah. Good money on these. Hey, I don't know.
Upstairs, and then walk in school, like, yeah, and tell me, so sad, right now, you know, not like, I was like, really happy, and I like, not like, totally straight. So. Yeah. Yeah, down to five. So. If you do it, you have to do one of the five, let's keep it. You're one of the five. You know. Right. Another spot. So you're just starting.
Yeah, grab water.
And we don't need anything else up on this.
I should get the last slide, I'm just, I have my phone, all of my family out there.
It's funny because this. This. Thing. Just like, why is it here instead of looking like. But it's not like they installed accident.
Yeah, right.
Got a little. We're also going to do just see, have that in mind. That's not your. It's the best it's ever gone. Yeah. That's a good. All right, guys, thank you so much for bearing with us with the slight adjustment. We're gonna get started with the Q&A panel with our lenders. And you know all of them because they've been talking to you since 10 a.m. this morning. But there's also a lady up here who needs absolutely no introduction, but I'm gonna do it anyway. Our broker of record, Vicki Carey, who's been doing this. For any of you who don't know Vicki, she's been in the business for 35 years now. At least the number gets a little fuzzy in this book. But one of the reasons we wanted to have her as the moderator for the panel is because of her knowledge and her expertise. And so I'm sure that we'll be getting a lot of information from both our lender partners as well as from Vicki. So it should be a really good session. So without further ado.
Thank you, panel, for being here.
Thank you.
So we're going to start with GoBank. Here's one of our questions. What are the 3 most important activities each agent should focus on as we step into the fall and winter months?
Great question. Well, so the 3 activities that I think right now, especially heading into the fall and winter markets, you hear like winter is coming, right? So one is definitely following up, constant follow up. How many of you have a good CRM? All should be raising your hand. I just come in. Yeah. Okay. So you definitely want to be using your CRM, following up with as many clients as possible, right? So that's extremely important. In addition to that, you want to be attending as many open houses as possible. That's how you get your face-to-face. It's very, very important that, especially when you're building your sphere, that you're involved in activities where you're constantly in communication with people that you can talk to about buying real estate, right? Or selling real estate, right? And then the third most important item is to really know your craft, right? So, we talked about, of course, mortgages today. There's a couple of programs that we talked about up here that are extremely important. And if you know just the basics of the program, and you can hand that person right over to us, and then we're going to take them to the finish line. You want someone in your corner that's able to sell not only you, but also sell a service as well, right? So whenever I sold cars, I didn't really know anything about selling cars and about servicing. All I knew was sales, right? So I would take the person all the way down to the service center and I would let them sell for me. That's basically the same thing I use.
Good. Any thoughts on what he was talking about? So there's an agent here who's new. And was doing an open house for one of our teams. First open house. And I felt it important for me to have a one-on-one with this agent. And I shared with him the importance of doing an open house. Not only the face-to-face contact, but how to do it correctly. Just because you have a license doesn't mean you know what you're doing. And that's in any profession, right? We all know that. The plumbers, the electricians, the carpenters, we all run the right? Okay, so with that said, as indicated here, is that the open house is giving you exposure. Nobody knows you are a realtor unless we tell them. We don't wear A-frame signs as we walk the streets, okay? There's no neon light going over our head. So the
Unless you have
world has to know.
t-shirts.
Yeah, that's right. So the world has to know who you are and what you do, okay? So it's important, as silly as it may sound, there's a right way and a wrong way to do an open house. So those of you who are newer in the business, who may be in pro coaching, I'm sure that's been a subject that's been reviewed over and over, but if even so you're not. And maybe you entered into this business a few years ago, if you had a pulse, you were selling it. So, but that doesn't mean you weren't schooled, that doesn't mean your foundation is firm and steady. You have to have a good foundation or everything above it crumbles, right? So don't hesitate to ask questions. Don't think you're a dumbass because you didn't know something. You're not born with this knowledge. You gotta open your mouth and call somebody and say, you've been doing this 35 years, you've been doing this 10 years, you've been doing it 7 years. Can you bend your ear for 10 minutes and just really do your open houses? See, if we take the time to listen and shut them out. Out of the 10 things that you hear, there may only be one thing that gives you that moment. But it's that perfect, wonderful little pearl of information. Do not be afraid to ask questions, okay? Go back, number 2. What 2 or 3 mortgage products do you think are important for each realtor to have in their tool belt and why?
Well, that's a great question. So we talked about the gig economy, right? Brandon did a fantastic job talking about the gig economy. These are folks, many of them, you, that are self-employed, 1099, right? They've been 1099 for just over a year. Maybe it's only been 1 year, right? These are people that are on Amazon. Your YouTubers, you know, I had a big meeting with a lot of YouTubers. Some of you saw it on my Instagram. There were some Lamborghinis, some Phantoms, things like that. And a lot of them are my clients, you know, people that I've sold $2 million homes to, $3 million homes to. And on their tax returns, maybe when they take a look at the tax returns, you know, there's someone I'm working with now. They own a really large company. I don't want to say the name of the company, obviously, but a really large company. However, in 2021, they were doing fantastic. In 2022, they had a little bit of a loss, right? So they can't get a conventional loan, right? So we were able to take just 3 months of their bank statements and get them approved for a mortgage, right? So a bank statement loan is incredibly important, especially as now gig workers are going to go from about 42% of the economy to about 49–50% of the economy. That's huge, right? So you want to be aware of this because that's really important, especially when you're talking to your clients. So that's an important product. Also, in times like these, when we're heading into the fall and winter, right? And markets are starting to constrict. Smart investors are the ones that are buying at that time, right? So if you're working with investors, right? What's really important to an investor is cash flow in many cases. And sometimes they're looking at, well, what's going to be the long-term advantage here, right? So with investors, one of our best programs is the debt service coverage ratio. Right? So you're going to hear about that a lot, DSCR loan. The DSCR loan for us, it's only 20% down for an investor. We have one that's 15% down. That will include all of their rehabs as well. Investors, some of you are investors, because I've worked with some of you on your loans. Investors are what are going to keep this economy going, especially when they're buying the homes that are still left on in the marketplace. So those are the 2 loans that I think are most important right now, the DSCR and then also, or the bank statement loan and then the DSCR loan.
Great, thank you.
Did I say 2 or, was it 2 or 3?
Yeah, 2.
It was 2?
It was 2 more.
Oh, 2.
Yeah, so 2's quite adequate, thank you.
I was gonna say 1% down too. I know Tessa's looking at me like, why aren't you saying it? Yeah, so sorry about that. 1% down is also extremely important, just because, you know, you get up to $4,000 towards a purchase of a home. I mean, that's really important. So if you're buying a home like $200,000, you know, give you $4 grand. Now you only need well, 1%, right? In order to purchase that home. And then you can couple that with another grant. So I mean, I have people that are getting all of their money back on a conventional loan that they put in for their earnest money deposit. So those programs are extremely important. And there's going to be a lot more of those coming out, especially as the government starts to focus on not only first-time home buyers, but first-time home buyers that are normally left out. So those are first-time home buyers that are in underserved communities, right? So if you're in an underserved community and you're trying to buy a home, you're going to have access to those funds. In fact, there's the first generation grant that's coming out. So if you're a first generation buyer, meaning your parents didn't own a home, you can get up to $25,000 towards your purchase. That was just recently passed. It's not out yet, but it's going to be out soon.
So, very important. We are not loan officers. I know some of you think they're quite fabulous. But you are not. Okay, this knowledge sitting here on this panel is priceless. There's no money to equal what's sitting right here, okay? Don't put yourself behind the 8 ball. Know enough to know you don't know. And that's where you refer out. I have mortgage lenders that can help you. So know enough to know to refer out. Don't be quoting and trying to do math on your phone and all these fabulous things that you can't do. Know enough to know when you don't do it. Prime example, which I use for some other things, but I'll work on this. Know enough to know you don't know. When a buyer says to me, Vic, I want to use an attorney. Absolutely. But it must be a real estate attorney, I said. And the husband's like, what difference does it make? I said, may I give you an example? Now, because I've done this older than almost everybody in this room, I will tell you that if you correlate medicine with this business, somehow people get the aha. So I said, sir, I happen to notice a little clouding in your eyes. Perhaps you need cataract surgery. Is your wife's gynecologist going to do that for you? And every single time it's the same deal. And I asked, but why do you? I mean, are they not both physicians? Ah, yes, but it made sense. You don't want the maritime attorney, that would be the attorney who deals with water and ships, right? The maritime attorney reviewing your deed package. Okay, this actually happened to me. Family member through marriage, I sold the boys' houses. And mommy, who I love my sister-in-law, insists her brother, who's a maritime attorney from New York, come down and sit at the table. It was, he said, Greg, I don't know what the hell I'm doing. I said, it's okay.
You got a check, didn't you?
Yeah, no check. Oh, this is all gratis. So I sat him right next to title. And he would look at the floor, whisper the title would tell him what it is. He would turn like this to his nephew and say, okay, this is what this is, and you sign here. And the next form, it's like stupid ass. But in her mind, it was her brother, and it was fabulous. But you can see the importance of following the appropriate professional we need to go to, right? So it's that same concept all the time. Guaranteed rate, Alyssa, you're right. What is a benefit to using an in-house lender?
I mean, look at us. No, but seriously, we're in a shifting market. There are definitely like less deals out there. So when you do get under contract, you want to be certain that you have a great team behind your contract. You're going to be certain that you're going to get to the closing table, that you're going to get paid. So obviously that's why we're all here. But besides that, I mean, you really just want to make sure that it's going to go smooth for you and for your client. We have tons of products and programs up here, pretty much everything you ever think of. Besides that, we have great variety up here as well. So a lot of really great agents will model match. if they have somebody who likes dad jokes, they might refer to Jen.
Got a million of them.
The best kid ever. But seriously, you just want to make sure you have a great team behind you. We are all super reliable. We're in-house here. We are always upstairs. We can pretty much always find at least one of us sitting up there if you have any questions.
Jim, you've been in the biz a long time. What are some of the things that have changed significantly over the years? And what are some other things that have remained consistent?
So, I think as long or longer than you. And I'm not gonna do a history lesson, but try and keep this relevant to what it means to an agent today. Speed and certainty. So when I took my first application, sitting at somebody's kitchen table, wrote it on a piece on an application, hand wrote it, brought it back to the office, gave it to the assistant processor, who typed it up. If she remembered, sometimes she put it in a drawer. Mailed it to the credit company. And a week to 10 days later, we got the credit report back to see if that house that they just sold to somebody actually got sold. So, fast forward 30-something years, and today, the speed and certainty, Jeremy talked a little bit about the 7-day commitment, the 14-day closing. These tools are incredible. It's really a great service to the customer, and it's a really powerful tool for you as agents to use. Seller wants their money and they want to know they're going to get it. And there's resources on the mortgage side that can change the traditional thinking of, it used to be a 45-day close, then everything was a 30-day close. And now if a 2-week close with the right customer is going to get you the deal, or even a 1-week close, then work with your lender partner and use it. So speed, that, when I started, we were taking applications on stone tablets. And we had just switched to parchment paper, so it's a very confusing time. But something that has remained the same is that the agents who are successful to me are it's the same personality type. They're active listeners, very active listeners. And they're creative problem solvers. So they really, and Christian did a great job of talking about how we have to identify, we have to become friends, and it's a people business, and just really listening and not pushing back on objections. Creative problem solving. I had one a couple of months ago. It was a daughter in Philly who teaches at Temple, and her mom was moving down from Vermont, and they were looking for duplexes, and there's no duplexes. So she was looking for duplexes, and this agent found somebody had built a triplex that they tried to sell as a triplex, and they couldn't sell it as a triplex, so they condoed it, and there were 3 condos there. So she said, "Yeah, I know you're looking for a duplex, but just why don't each of you buy one of these units?" And it was magic. So that kind of creative problem solving happened, back in the 1800s when I started in the business, and it's still today.
Great, thank you. Melissa, what advice from a mortgage perspective do you have for agents who want to invest in real estate or want to work with investor clients since they are repeat clients?
Sure. I didn't like anything else, educate yourself. Join investor Facebook pages, go to investor seminars, interview real estate investors that are currently investing themselves, learn as much as you possibly can. And then honestly, just dive in. There's no better learning to actually physically be doing it yourself. Get a mentor, find out how they analyze their deals, find out how they finance their deals, where they find their deals, and just dive in. again, there's no better learning than to do it yourself. Once you do your first, it's pretty streamlined at that point, as long as everything goes well, you'll just repeat. And then with working with investor clients, it's great because they're never really one and done. A lot of times investor clients are repeat clients. Like Christian had said, I think that that's really gonna fuel this economy. There's a lot of investors that are out there that are sitting on a nice chunk of cash. They want to start to invest now because people are kind of backing away from the market. So they're going full force into the market and they should get some deals. So yeah, I mean, it's great to have investor clients that you work with because they're never one and done. It's gonna be a great business for you over and over again.
Excellent. To tag off what she talked about on investor clients. Not only do you obviously have to learn inventory and such, but you need to know the rules and regs for the county these properties are in. So Philadelphia County in itself has a lot of rules and regs for investment properties. You need to know these because your investor, there are many, not many run with blinders on. And they're not paying any attention to details. Okay, the licenses they need, the business license they need, how they handle Philadelphia with the paperwork that is needed and how to get the rental license. And what happens if you don't have a rental license? And what happens in Upper Darby if you're going to rent something? You need to know how these municipalities work. Is a fire extinguisher mandated? Am I supposed to have one? Am I not supposed to have one? So you need to take that extra step, not only to teach yourself, because yourself is watching what you're doing. You're watching entrepreneurs work. And you're saying, it's really cool, I could do this. But to do this, you have to know what you're doing, okay? There's always the learning curve. So it's important to understand what these townships are doing, because I'll tell you what, you get caught with your pants down, it's not pretty. Okay, they will close your duplex right up. It's not good. So know how these things function and work, have an understanding. There's a wonderful company in Philadelphia called HAPCO, HAPCO. It's been around a long time. HAPCO skews to the landlord. Landlords have no rights. Okay, but this company has been around forever. And their goal is to help the landlord, guide them, prepare them. It's a small $150 a year. It used to be a paper once a month update you got. Now it's online and they have a phenomenal eviction process. That's all they do all day, every day. So God forbid you need something evicted.
What's the name of that company?
HAPCO, HAPCO, wonderful company. And
I'll do a couple of missions.
they're great. They're really, really good. So little things to remember. Jim?
HAP.
CO. Having worked with many different agents over the years, what are some of the techniques you have seen that help successful buyer agents get their clients' offers accepted? Especially in the environment we're in now.
Yeah, I think Jeremy stole my thunder a little bit, and touched on this in his presentation. So I would put it in two categories. One is really making a connection. Understanding the seller's motivation, understanding the agent. And getting some kind of connection with the agent, having a conversation with them, making it personal, getting to know them, and figuring out a way to let them understand how reliable your offer is. I think the cute letter of, my dog would love running around in the yard so much thing is kind of over. So
Yes, that is over.
Yeah, didn't they make that legal recently?
Well, the love letters that the NAR has put out. We know what NAR is, right? Okay, thank you. NAR has put out, no more, stop doing it. Discrimination is a screaming situation with that.
Well, I had the broker of record approves of what I just said. That's it.
Yeah, so
I don't look at
you gotta
this right.
stop doing that. Yeah,
And then, I think the other thing that Jeremy touched on is, get the lender involved. Have the lender, like at Guaranteed Rate, we have about 35 people who do business in this city. If I know the listing agent on an offer that I want, I'm gonna call them. But I also will put into the email, does anybody work with, Sally Smith? And yeah, I've got a great relation, and then they'll call Sally Smith to say, Jim's got a deal in with you, and the buyers are super solid, it would be great if you consider it, et cetera. So it's that creative problem solving, using your tools and resources. And getting a personal connection.
Great, thank you. Cross country, Jared. You're up. Where do you see rates headed over the next couple of years?
Well, I see the food, and that makes it more difficult, so I'll go as fast as possible. Because I think these are the last two questions. But the rates are very important to understand. To be honest, the rates are driving the game. We have buyers who aren't buying houses because of the payment, right? But think about those buyers, and what are buyers doing? They're idly sitting around and waiting, right? There's a lot of buyers out there, they're waiting for what rates to go down, values to go down. Think about those same buyers who've been waiting for 3 or 4 years. Homes have doubled in some areas. And they missed out, right? Rates just went up. So we need to educate our buyers about the current market. Interest rates is a big part of it. Rates are high for one reason only right now, to get inflation under control. And as soon as that is under control, which it's pretty close, right? Then the rates are gonna level off. I actually think they're gonna go up a little bit more. That's okay, maybe to 8, right? But they'll level off. They'll go down as early as 1 year. And I've done 3 rate projections online by reputable sites just to see what they thought. And they were all the same, 7%, back down into the 6s at some point next year, right? Maybe into the 5s in 25. Some were projecting 4s in 27. So when you're talking to buyers, now anything could happen, right? But this is the projection, and the interest rate in a non-inflation market should probably be around 5. A smart buyer is gonna realize, and we talked about that, you're gonna have this rate at 7% and $2,500 a month. You're gonna have that for a couple of years. Your end rate in payment is gonna be at 5.25, 5.5. Let's talk about that, because that's where your payment's gonna be for the remaining 28 years. It's gonna be $500 a month less. And once they realize that, kind of believe that, and that's all the market projections are pointing towards that. You can have a better conversation with the buyer. The payment's actually $2,000 a month versus $2,500 for the life of the month. So it's important to know and we'll handle all those questions. But rates are high right now, they should go back down.
Great, now you ran right into my second question. What are some ways where we are able to convince a buyer to buy now versus idly sitting around and waiting, which you really touched on?
Yeah. Well, just to add on to that, because I kind of actually covered that. Tell your buyers, that when the rates do go down, there's going to be more buyers, right? When there's more buyers, which there really isn't that many right now, they are sitting around idly waiting. So if the buyers double, that's, instead of 5 people wanting the house that you want, now there's 10. So you're gonna overpay for that house, or you might not get the house at all. So if the buyers understand that, believes that, they should buy now, right? As opposed to waiting for the rates to go into the 6s, buyers will double. And I remember this month, you guys don't remember the month. I think it was January, rates went into the 5s for a little bit. The buyers came out like crazy, just because they were in the 5s again. It's gonna happen. And the buyers that, realize what we talked about today was some phenomenal content. This was really good stuff. It was a lot of information. But they can understand that it's better to buy now than when the buyers double or triple again.
This is where, again, you need to know you don't know. Again, you're not that nice. This is where you refer to the loan officers. This is what they do all day, every day. They eat, sleep, drink it, okay? That's why you have to take your step back and allow the next level of expertise to carry on and go look for all the variables and all of the options they have. Let me just throw a question out there, speaking of variable and options. What would someone like to express their opinion? I say this lovingly. With having a buyer go to a bank to get a mortgage. What are the advantages and disadvantages?
Well, if you're like me.
I'll take this.
Like me, I don't really like banks at all. So I can't really think of many advantages, other than the fact that you walk in there on a regular basis and they kind of like. So the disadvantages are banks, they can be a little bit restricted.
Rigid?
Right, and rigid, right? So their guidelines, they have to kind of stick to that set of guidelines and that's it. Whereas for us, we can kind of work around the guidelines, work with the customer on an individual basis. And sort of meet them where they are and not say, oh, this is where you need to be, and then that's it, right? I want to meet them where they are. What is your situation? You know, what do you have put down? You know, what's your income currently? Things like that. And then kind of working around those things instead of them having to work around me. So that's.
Right, so they have very, and correct me please if I'm wrong, okay? So from my understanding of banks, they have very limited programs. And they're very rigid, you have to take that square and put it only in the square.
Right.
Where this panel are brokerages. Many different options, companies you have to look at, FHA, VA, conventional, then everything that drips down from that. To see where that square peg can also fit, it fits in this hole too, and it fits in that hole, or maybe. You have the round hole, but you have a square peg. And when you have a mortgage brokerage working for you, they chisel those little corners. And they make that square peg fit in that round hole because they have the ability to do that. So when a client says to you, I'm going to ABC Bank. I want you to take a deep breath and ask why. Usually Uncle Charlie, who's worked at, ABC Bank, told me this is where I gotta go. So, you can't be rude. And you have to give options, and that's where the options come in to educate them enough to know.
I ask that comment too, it's in the sense that in terms of the experience of loan demand. I'll give you an example. So I went to a small university called Bucknell, 4,000 undergrads, right?
Any Bucknell people out there?
Not a second thing, but at the same time, by the time I was a freshman or sophomore, I had classes with technical. Especially my name, my face, where I was from. If I had questions about an exam or an assignment, I could talk to them directly. 50 minutes away, Bellefonte, Penn State, great university. We have the most CEOs in the US, 50,000 students. Freshman seminar, you have 500 people in class. They had 10 TAs. You couldn't talk to them. You had a question, you couldn't ask them a question. You have to go to the TA. They may not be clear on the assignment. You're both confused. I say to say this with the panel up here in our companies, you're going to get that individualized experience. As a realtor, how many times have you called the loan officer? They have no clue what's going on in the retail bank. If you don't know that, exactly. Right. So with people on the panel in our organizations, the experience your client loan's going to have is when we're there on face and name. I just know.
Great, thank you.
And real quick, the difference is, for the bank, the client is the buyer, right? The client is the person that has the checking account, right? For us, the realtor is the client, right? So the bank is gonna make sure that they're protected. They're gonna get paid back. Maybe they'll close on time, maybe they won't. There's no realtor vested relationship at stake, right? For us, 100% commission, every single one of us, the realtor is the client. We're gonna make sure we get you closing, so that we can get the next referral. And that's really important too. Not sure exactly how to explain that to the buyer necessarily.
Just like that.
But that's the big difference as well, is we're working for you guys. To get your closing on time, because we have our realtor relationship and livelihood that stays on.
I would also say, if we're not doing mortgages, we're not doing nothing.
And the people at the bank have CDs to sell, home equity loans, car loans, like Brandon said in the first session, so.
Good point.
Also, the people at the bank, sometimes that, first person in contact is not, like, they don't all have all the same credentials that you guys do. Like, there's like a bank wide and MLS number, and they don't have an individual credentialing or licensing. And the person that you meet, like that banker or that loan officer at whatever bank, they might have zero experience. May have never even closed a mortgage before, but they are advertised as such because the bank does it. So you can even, I've been on deals where, I've had someone pre-approved with ABC Bank, and I called the person that's on their pre-approval, and they can't even answer basic questions. I'm like, what is happening?
When that happens, who do you want to call?
Of course, Mr. Best, but that's why I said I don't put up with all that. And I also like that we have MSA or in-house lenders. You guys are in here because should we have a barrier sticky situation, I am the cleanup pull up. So I can just pull up my own office and say, don't understand what's happening right now. I am the cleanup pull up. I literally pull up or you might have our title, and even here, she knows. But I like to just go walk down the hallway and say, hey, can we fix this real quick? And to me, that's super convenient that I have to wait on the phone or text and wait for a response. You can't ghost me in person here. Hey. So Brandon knows, he's here.
Brandon knows. That's why I did it.
It's an area of opportunity too, especially for agents who are newer to the business, seeing a panel here that we know is in-house. Because you, and I also know very little about mortgage, and I'm fine. But that's because having good mortgage partners, you have someone to go to, but it also means you can include them in marketing, like do a video of one of these folks. So like, hey, can we shoot a quick, I'm gonna ask you 2 questions about what's going on, and since you know what you're talking about, I know the book for it, then you have an expert literally in-house. So like, you have people who can make you look smarter than you actually are.
And make you look really good, especially with the listing videos. It does not have to be your listing. I always said that. Like none of the videos, I'm not a listing agent. I go to a ton of open houses. And then I do a lot of videos. And none of those houses that are there, I don't list any of them. But I mean, the real estate agent who's listing home, they want me to put the video out. They want people to be exposed to it because the more eyes that are on that house, the better chance they have of selling it, which is why they allow anyone basically in the brokerage, I'm assuming, to do an open house. As long as you were saying, they know how to do the open house. You don't have me come to the open house and you don't have balloons set up. Like I have an open house I'm doing on the 17th. I have my assistant call the agent and say, hey, are you going to have balloons there? Are you going to have the directions? Or, you know, there are certain checklists that we have before we'll do an open house with you to make sure that you're doing those items. And, you know, Texas good enough to help me out with that. Of course, I might be vetting your ear a little bit later to see if there's anything I'm missing from that. But those open houses are critical. That's why I'm not doing them because I don't have anything to do on a Saturday. So I shouldn't be doing more open houses than anybody in this room. You guys should be doing way more than me. And I'm doing at least 2 a month. So
There you go.
that should.
Good advice, good advice. All right, lunch is here. Let's thank.
One question.
No, on your thing.
You missed Brandon. Did you miss someone?
Folks, both of them, Christian or Brandon, but your line state.
Oh, God. It's okay. You know, I'll ask you.
Brandon, what's one thing that makes new agents do starting out with the mortgage? What's one of the best pieces of advice new agents can get when they think about work?
Come to us.
Okay.
That's what I'll say. Okay, so many times, you know, you wanna, when you're new in a career, you wanna be the expert. You never wanna do something that's going to downgrade your success or your status. But it's okay to say you don't know. That's okay.
Oh, right.
And I think in this business, especially with AI and technology, it's about getting access to the right information. What separates us as experts from them is how fast we get access to information. So if we don't know, just say something.
Right, very good, very good, thank you. All right, guys.
Oh, yeah.
Everybody. Stand, standing, I think I'm gonna put you right there.
You're good. You got your food and everything? You get lunch and all that? For lunch? We got it? Yeah.
It'll take hours. I know it's $1 And I know it's sort of. I was there, I was. Oh, they're gonna get this there. And then they probably. And, the reason they were like this. And it's certainly for feelings. And then now I want to like get on more. And now I'm having. Yeah, and that's probably. Yeah, I don't. It's so, I'm really. That's not bad. It's there. And I'll bring that up in the story to the board now. It's no wonder. If you end up using them, I'll know not to be. Like, maybe that's how. Works with Mark. People there.
I helped them write out this book. I listed 5. And then one was like never caught it. I just had to hey, that I did. Like, oh, I know here, that's from here.
So, you know, kind of like I started, and then they started.